The real question is, what's next for Australia's property market? Will we see interest rate cuts in the near future pushing up property prices? Or are we going to see Australia's economy slow and property prices slump over the next 12 to 24 months? My name's Luke. I talk all things real estate, renovating and financial freedom on the channel. And today we're going to be specifically looking at what's happening with interest rates. Now the cash rate's been held at that 4.1% mark. When are interest rates going to be cut? And what are Australia's big banks saying about interest rate cuts in the future? So let's cut over to a recent article about these interest rate cuts and what the big banks are saying, and I'll share my thoughts on where I think Australia's property market is heading. Now, 3 of 4 big banks believe interest rates have peaked. Rates could fall by March 2024, big banks forecast. Now, 3 of the big 4 banks, including CBA, Westpac and ANZ, believe that this is the end for the interest rate hikes. NAB still expects there to be one more rate hike later this year in 2023. This second consecutive pause is significant. The board no longer needs to continue its rapid-fire approach to hiking the cash rate now the data is moving in the right direction. Although it's good news for mortgage holders that the cash rate has been held, many are wondering when the rates will begin to go down. Now that's the big question at this point in time. When will the rates be cut? And should people be getting into the property market now? Or should they wait another 6 to 12 months? I probably get asked that question every day of the week. Should I buy today or should I buy in 6 months' time? I don't think you should let these factors, whether the rate's going to come down by 0.25% in March next year or be cut by a whole percent over 2024, determine your investing decisions. You need to look at your overall big picture strategy, why you're investing in property, and you should be taking that mid to long term horizon when you're investing. So not buying for the next 24 months, you should be buying for the next 7, 10, 15 plus years. So it's good to stay up to date with the news and the media and what's going on with interest rates, but also on the flip side, make sure you've got your long term strategy in place. The Commonwealth Bank of Australia is expecting cuts to start in March 2024. The bank forecasts there will be 4 rate cuts next year, bringing the cash rate down to 3.1%. So essentially that's 0.25% increments coming down from 4.1 down to 3.1% next year. And on screen, we've got a shot of the Consumer Price Index with annual movement. So you can see it's shot right up between 2022 and into 2023. And now we're looking for that downward trend in CPI, which is inflation. ANZ, however, doesn't expect a cash rate cut until late 2024 and only forecasts 1.25% reduction. Similarly, Westpac believes there will be a total of 6 rate cuts across 2024, starting in September, bringing the rate down to 2.6% by late 2025. NAB forecasts the central bank still has one more rate rise this year, and taking the cash rate to 4.35% in November 2023. So some very differing opinions from our big 4 banks here in Australia. Somewhere between 4.35% and 2.6% over the next 24 months. Now, obviously, if you're speculating, it could land somewhere in the middle. So maybe we'll have a cash rate around that 3.5% mark, which would mean that mortgages and investor mortgages are sitting between that 5 to 6% mark rather than that 6 to 7% mark at this point in time. Now, this isn't going to make a huge difference in the market from an investing point of view. A 1% difference in the cash rate is only going to take 1% off your mortgage and give you a little bit more serviceability. The more interesting thing here is market sentiment. What is this going to do to the broader market and people who have been fence sitting? When they see rates come down, are they going to dive into the market? Plus the overseas migration, the interstate migration here in Southeast Queensland where we're buying, we're noticing that people are starting to get in now before rate cuts come and before that market sentiment changes. Now, when it comes to Emily and I and how we built our multi-million-dollar portfolio, it's more about looking at our capacity and what we wanted to do in our next step. We started with capital growth in our portfolio by acquiring assets here in Southeast Queensland and buying one house at a time. We then added value to each of those properties and looked for future development potential and then transition to cash flow assets over time. So we ended up buying 3 houses at around the $3.5 million mark in terms of value today. And then we bought the unit block in Coffs Harbour to boost the cash flow in our property portfolio. Long term, we may sell down one of our assets to pay off some debt and essentially give us more capacity to buy again. And then we're potentially looking to buy a motel or a higher cash flow asset to round out our portfolio at around the $5 to $6 million mark. So work out for yourself. In your situation, knowing that there might be some rate cuts in 2024 and your bigger picture, what are you looking to achieve? Do you need to focus on growth and build your asset base? Or are you in your consolidation phase and it's time to start paying down debt and realizing higher cash flow by building granny flats or selling out of some assets and buying higher cash flow assets? You need to look at what's right for you. So let's read a little bit of commentary around what the RBA is saying about Australia's economy at this point in time. So the board considered the option of raising rates further. In its latest statement on monetary policy, the central bank weighed up whether to raise rates again in August, but ultimately decided it needs to wait for the lag effect of consecutive hikes on households and the economy. The case to increase the cash rate further centred on the fact that inflation was still too high and that it was expected to remain above the target until mid-2025. Now, note that the target band is 2 to 3%, and so it's actually very difficult to get towards that target. Demand continues to exceed supply in some parts of the economy, and labour market conditions are still tight, which is conducive to above average increases in prices and wages. Alternatively, product growth, including the labour market and goods and services, remains weak, which means prices are still increasing. Would you buy a house at this point in time, or are you going to hold off another 6 months? So based on all this information, I think Australia's market is poised for growth. We're in the position where people are going to be able to access more cash in the next 12 to 24 months. As interest rates decline, people will have higher amounts of leverage if they want to use debt to build a property portfolio or buy their own home. So I think between the interest rate cuts, the wage growth we've seen here in Australia, the migration story, the underlying supply issues and costs of building a property at this point in time, I think Australia's property market is again poised for growth. I don't think we are going to go through a boom market again like we've seen the last few years, but I do think Australia's property market is poised for growth based on all of these factors. This always leads back to taking action. You just can't sit on the fence all the time because if you don't have the asset base, you can't get the compounding growth. Most Australians struggle to buy 1 or even 2 investment properties. So if you're able to accumulate the asset base you need, get compounding growth on that much larger number, then you can set yourself up well for retirement or even an early retirement, looking to create financial freedom and more choices in your life, which is exactly what Emily and I have done. We've built our property portfolio with the view to create more choices, to spend time with our kids, to spend time working on our own home and working on our business. So if you'd like to do the same and you want to sit down with myself and have a free chat, head over to purposeproperty.com.au. You can book in a free strategy session where we'll talk about yourself, talk about exactly what we do here at Purpose Property and leave some time for some questions. So head over to purposeproperty.com.au to book in a free strategy session. Otherwise, I'd love to hear your thoughts on where you think the cash rate is going over the next 12 months and whether you think property prices will continue to rise. Thanks for sticking around. I'll see you in the next one. Peace. What do you think about Australia's economy? Da? Is that Asa?